Good afternoon, everyone. We are here to discuss a webinar on the US elections, which we will see whether if it's an inflection point or a non-event. Today, to discuss that, we have with us Mr. Dipen Sheth, the head of institutional equities at HDFC Securities. Over to you, sir.
Hi, and thank you for calling me for this webinar. Welcome everyone to the webinar. We want to make this as interactive an event as possible, so we'll be taking questions from you. But just to begin the session, I think I will share some top of mind thoughts on this event, which I certainly think is an inflection point of sorts. It's not a non-event by any stretch of imagination. The world's largest and most powerful economy is choosing a new leader today, even as we speak. And from what it looks like, the scale is tilting definitely towards Mr. Trump. And I think this is going to have a profound impact on geopolitics. It's going to have a profound impact on the US macros and the US internal governance, trade policies, immigration policies, spends on environment and oil exploration, for example, and how the US engages in trade and indeed in politics with the rest of the world. And that includes the most populous democracy in the world, which is India. So as citizens of India, I think we should be keeping a close eye on what's happening in the US today and accordingly align ourselves not only as a country but even our investment portfolios to take care of or to address the changes that are playing out. I think there are crucial differences between the way Mr. Trump sees the US economy and Mrs. Clinton sees them. And I think the best way to describe these differences is that Mrs. Clinton is likely to maintain mostly a status quoist stance, and we might see disruptive changes if Mr. Trump comes to power. So with that initial set of comments and recognizing that Trump represents the face of hyper-nationalism that we are seeing play across the world, starting right from the Arab Spring to Brexit, to the turmoil in China, and indeed the new government in India, I think this hyper-nationalism phase in geopolitics has picked up momentum, and I believe if Trump comes to power, as it looks like at this point in time, then we might certainly see much more aggression from the United States. We'll open up the webinar for questions now. Over to you, Sneha.
Sure, sir. So, okay, the first.
So we can start with, yeah.
Okay. Okay. The first question is from Mr. Ganesh Puri from Balasore, Odisha. So he asks, what would be the impact of Donald Trump victory on Indian rupee and the FDI investment in our stock market?
Yeah. So I don't think currencies are going to be impacted as much as economies. So initially we've seen a run-up in currencies such as the Japanese yen or the Swiss franc. I think the risk of trade that will come when Donald Trump comes to power, and it certainly looks that way, will be that people will sell emerging markets, so there could be a little bit of pressure on the Indian rupee. But I don't think that is the big thing to look at. The important thing to look at as investors today is whether the current fall, and that fall has happened, the Dow has also cracked. We've of course had this overnight event on demonetization, but even outside of that, Trump victory is definitely initially going to lead to a knee-jerk reaction for emerging markets. And in that crack, if we can identify good sectors, good companies which have fallen unreasonably, I think we will be on to good things. I don't think this is as much a currency play as it is going to be a stock market play from an investing perspective.
There's a question from Mr. Narendra who says that which sector is going to be safe for investment after this black money, surgical strike, and maybe a possible Donald Trump win?
Yeah, so both the surgical strike on black money, as Sneha calls it, and the victory of Donald Trump are both very decisive and swift and high impact events that are played out over yesterday and today. If you are looking for specific stocks or sectors, I think the way to look at sectors is that there are some sectors which are completely inward looking in India, and they are the ones which are likely to do very well. But having said that, so if you look at cement or real estate, they are simply not connected with global dynamics, but they are suffering in today's crack, and that's because real estate prices are expected to crack with the attack on black money. So if you exclude the stocks which are high cash impact stocks and domestic focused, so if you look at the general theme of financial savings increasing and tax compliance increasing and more people coming into the formal part of the economy, then the natural stock to look at would be a broad-based play on financial services such as Kotak, which I believe is down some 4 or 5% today. It remains our top pick in the large cap financial space. Remember, we do not have ongoing research, nor are we statutorily allowed to recommend our group stocks. But Kotak definitely, to my mind, looks the cleanest, the most capable, the most diversified, and the most successful, most well placed stock in the large cap financial space. If you are a long term investor, and whether it's the demonetization and whether it's the jitters and exits of index money out of emerging markets, which is also likely to affect Indian markets as it has today and might keep affecting for the next few days, I think Kotak is a very good stock to look at.
The next question would be from Ms. Rohini Kulkarni from Bangalore. So obviously with when the US comes into picture, elections, the obvious question is IT. How would IT stocks do? Also, me knowing that Trump is not really too much in favor of immigrants. So in that regard, how would this sector per se and what companies would do well or not do well if Trump comes into power?
So Rohini, the short answer to a long question is that the considered wisdom has been that IT and pharma are under some kind of tension because of the slowdown in the US economy, and now perhaps more and more of the hyper nationalism playing out there. A little bit of second level thinking would suggest to you that these sectors are actually close to their sentimental bottoms. If Obamacare is junked by Trump, it doesn't necessarily translate into lesser prospects for Indian pharma companies. Some of them are actually looking at very, very good US pipelines, approval pipelines coming up over the next few years. Lupin is naturally our top pick in the pharma space on the large cap side. On the IT side, I think there has been understandable concern around the reducing growth prospects for IT companies as the US economy has slowed down and as discretionary IT spend has come down in that economy. But if you look at some of the better managed and better placed IT companies, while they may not grow at 15-16% USD, you must concede that in the new scheme of things today, an 8 to 10% kind of USD growth rate is also very creditable, particularly when it's backed by specialized capabilities such as those possessed by HCL Tech, for example, and of course a broader healing that is playing out at Infosys. So to my mind, both of these guys are also value picks in this downturn. It's only a matter of time. I think it's only maybe a quarter or two after which people will realize that IT is actually a very good place to hide, especially as money goes out of emerging markets and as some of the domestic cyclicals in India take a beating. I think both IT and pharma will become good places to hide. We are close to a sentimental bottom for them.
And so another question on the black money issue. So so basically they're asking what for Mr. Mahesh is asking from Bangalore. So basically when we say about black money, the first sector that comes to our mind is real estate. So what do you think about the real estate sector, and how do you think companies would really
I think it's a very fair assumption to make that real estate prices are going to crack, real estate companies are going to suffer. It's not that every real estate company makes money on the side by asking for cash from its buyers. In fact, most of the real estate companies that we have under our coverage, we have a very high opinion of corporate governance standards there. But the fact remains that the sector suffers from a poor perception. It's going to see a slowdown in the velocity of sales, and maybe once the prices come down to more affordable levels, the velocity of sales will pick up. So here you have to be an extremely long-term investor. I don't think there is going to be short-term money to be made in the real estate sector by any stretch of imagination. Some of the poorly run companies might actually see cash crunches and so on. I'm not sure how it will play out for them, but the high corporate governance companies with very good quality properties being developed. So whether it's a Shobha or a Prestige in Bangalore, backed sometimes by their rentco assets, or whether it's an Oberoi which is completely a very respected real estate developer who commands pricing in Bombay. But all of these guys are certainly going to see price cracks, and the reason for that is not just that the black money is going out of the economy, the propensity of people to buy real estate. The consumer confidence is going to come down. So I see a slowdown over the next few months, maybe a couple of quarters, if not more, in terms of discretionary spending propensity in India. Whether it's about appliances, whether it's about luxury cars, whether it's about real estate, whether it's about gold jewelry. So all of these sectors are certainly going to be hit.
Another question is, which a lot of people are asking, is now that the markets are down today, probably one reason being the black money and the other reason being Trump probably gaining or winning.
Yes, yes.
So what is the direction for the market from here? What is the downside that you see for Nifty? Which sectors should you play in? Or what policies do you think, what aggressive policies would Trump come out with which will affect India and the sectors and the market per se?
Right. So I think there are many questions embedded there, and let me take them one by one. One is, where do we see the markets going? So certainly there is going to be volatility, and this volatility is going to continue for a while. It's not that markets will figure out a level today by 2 p.m. or something. I don't think that is going to be the case. If it is, then I'd be very surprised. I think a lot of the aggression of Trump has been partly election rhetoric, and partly it may get translated into action. Now, I think once he assumes that chair, he's likely to take decisions at a pace which will be more calibrated and which may not be as aggressive as he sounds on paper. I don't think the markets have seen the last of price action related to Trump's policies. I don't think the markets have even seen the last of the price action related to the demonetization announced by the Prime Minister yesterday in India. So my simple answer to that question is, we will have to wait for markets to find a certain stabilized level. When volatility and daily fluctuations come down, I think that's where investors can take a call. But the fact is that any kind of volatility on the downside helps long-term investors. And you may not put all your money on the table at one go, but if you this is the time to look at SIPs, whether it's in mutual funds, whether it's in stocks. If you identify the right mutual funds and the right stocks, then I don't see any reason why an SIP will not yield you arguably better results than trying to time the bottom. And I don't think that is something that we should try to do as retail investors. I've seen institutional investors fail at that. Most mutual funds, in fact, don't even sit on large dollars of cash for extended periods of time. So I think the best way to ride the volatility is not to try and time the markets, but to do SIPs. In terms of sectors, so that question, I think it will be a function of how these sectors stack up once the policies of Trump and once he assumes office. So he has been publicly saying that the first 24 hours are going to see signature policy actions. I don't think it's going to be as simple as that. But the broad undertone of his campaign has been that he's going to be tough on China and he's going to be tough on parts of the Middle East, as opposed to Clinton, who is Mrs. Clinton, who is supposed to see more of a status quoist. So to that extent, I think it's good news for India. Now, insofar as the clampdown on immigration is concerned, if Indian companies cannot apply for too many H-1Bs and ship people from here to the US, I don't think that is necessarily a bad thing. A lot of them have switched over to hiring more people onshore. The onshore and offsite effort mix is also changing a little bit at many software companies. I think the parts that can be offshored have already gotten offshored. So I don't think a clampdown on immigration is going to structurally hit the Indian software sector. If anything, a stronger US economy will lead to higher discretionary spends by US companies once the economy picks up. The argument is, or the concern, I think, is whether Trump's policies are indeed going to drive up the US from a moribund 1.5% or 2% growth rate to sustainably over 3%. So the last quarter itself has been at more than 2.5%. But I think once Trump begins to fine-tune some of his hyper-aggressive policies, we'll get a clearer picture on what happens. That said, the general picture is certainly that Trump will cause short-term worries in the US economy before things stabilize.
But do you think because of
Yeah.
this, the Trump win or the policies coming in which
Yes.
were aggressive than what people are expecting, there would be any change in the earnings of core sectors per se?
So the US facing sectors in India are mostly merchandise manufacturers and obviously IT and pharma. I think Trump's stances, uh, as much as Mrs. Clinton's stances on these parts of the economy, will not materially translate to very big downsides for these companies. If anything, both of these sectors, like I've said earlier in the webinar, they are close to sentimental bottoms. Maybe another few rounds of pain, and you might see some very high capability companies being available at 12 and 13 PEs. To my mind, that will be a multi-year buying opportunity because over time, as the US economy heals, which it doubtless will, my view is that irrespective of whether Trump or Clinton comes to power, uh, in the case of Trump, we might only see more volatility, but the US is definitely set for macroeconomic leadership for many more years to come. Um, in both circumstances, I see the US economy slowly healing, not dramatically. Maybe in the case of Trump, we'll see more volatility, but so that slow and steady healing upwards will lead to better prospects for both IT and pharma.
Okay. The next question from Mr. Saurabh. So his worry is that if Trump wins, would we see another fall of 500 points tomorrow?
So, if Trump wins is now a slightly dated question, Saurabh. I think the jury is out, technically speaking only, but it looks like a swing state like Pennsylvania is going his way. I don't know what has happened in the last 10 or 15 minutes, of course, but an unexpected victory in Florida, expected losses in California or, the Empire State of New York. I don't think there were too many surprises, but if you look at that huge swathe across Central and Midwest America, going all the way, starting from Wyoming and Dakota out there, and going down all the way into Texas, which is anyway a Republican stronghold, and Nebraska, Carolina, North Carolina, South Carolina, and of course that stunning surprise victory in Florida. So I think all that is adding up much more than the coastal states like California and New York or Massachusetts or New Jersey for that matter. And I think net a Trump victory is a given right now. The volatility might stay for some more time in terms of what announcements Mr. Trump makes. But I think by and large, this is a great opportunity to start your SIPs, whether they are into stocks, whether they are into mutual funds.
The next question is from Ashish from Pune. So he wants to know what would be the impact on the commodity market due to the Trump policies. Any flags to be raised?
So a little bit of risk off might certainly lead to gold shooting up, but I'm really not any kind of even alleged expert on commodities, and I will refrain from making a comment here. I think we should look for franchise-driven businesses and not commodity-driven businesses. It is not my job to give you advice on how to trade commodities. But my view is that if you invest in good businesses and stay invested for the long term, you can make much more money in investing in businesses rather than commodities. Quite frankly.
Okay, next question is from Abbas from Coimbatore. So he wants to know if, in the current situation, should an investor withdraw the funds at the low levels, as in if they're in losses, or should they wait, and what should be the way going forward?
So Abbas, I will completely recommend that. I will strongly recommend that you should not even consider withdrawing from markets right now. You might have suffered a 2, 5, 10, or even 20% drawdown in your portfolio. Consider it as a blessing, my friend, because I don't think you are fully invested in the markets like most of us, and we are getting a chance to average out on the way down. Like I said, if you find some of the good SIP stocks that HDFC Securities has been recommending from time to time, if you look at some of the Samvat picks that we had circulated through our retail desk, and of course the long list of 24 stocks that the institutional desk had circulated just around the turn of the last Samvat, around Diwali, you will find several ideas which are worth doing SIPs in, and an exit from markets right now, in my view, and I completely accept the possibility that I could be wrong, but an exit from markets right now will be nothing short of tragic this time.
The next question is from Rahul from Delhi. He would like to know, due to monetization, particularly in the secondary market in real estate, do you think the property potential would confine only to circle rates, which is non-cash component?
Yeah, so this kind of slicing and dicing will certainly be done, but Rahul, the bigger picture is that the propensity to spend on real estate will come down. The reason why a property in, let's say, Gurgaon, which is being sold by a high quality developer for no cash component, the reason why the price is high today or higher than what it was 3 or 4 years ago is simply that there is a propensity to spend, which partly is driven by the accumulation of black money in the economy, although the actual buyers of this property may not be parting with their black money if they have any at all in any case. So maybe this kind of slicing dicing is not really called for. I suspect that the low corporate governance kind of projects will see a very large crack in pricing. Some of these projects may not even be able to take off or get developed ultimately as their developers run into cash flow issues. But I do believe that even the high corporate governance developers will face a slowing down of velocity of sales. So my humble suggestion is we should not be in a hurry to buy illiquid assets such as real estate today, when liquid assets such as stock markets are giving us a decent opportunity between now and the next maybe 2 or 3 weeks or maybe even a month to accumulate stocks at a good price.
The next question is from Lakshmanan from UK.
Sorry.
Lakshmanan from UK.
Okay.
So he asks about pharma. In specific, he asks about generic drug makers. So he's, regardless of whether Trump wins or Clinton wins, he would like to know what would be the impact on generic drug makers.
So it's clear to my mind that Obamacare will be, furthered by Mrs. Clinton, and now that she's not winning, from what I understand, there is going to be some kind of a death blow to the Obamacare scheme, which was aimed at reducing cost of healthcare insurance for the uncovered part of the US population, or for the part of the population which was not being able to afford proper insurance cover for healthcare. I think to that extent, healthcare costs in the US for individuals, their out-of-pocket costs, can safely be assumed to go up. Although I must also qualify this by saying that Trump is fully aware that these costs need to be managed in a certain way. So I think the axe will certainly fall on drug pricing. But remember that drug pricing is driven by two broad strands, and that is that the innovator drug pricing remains very high, and generic drug pricing typically. So when generic companies like Lupin and Sun Pharma flood the US market with generic copies of drugs when they go off patent, price cracks are as much as 90-95%. So I don't think they are going to be in general criticized. Of course, there is this Department of Justice inquiry, or subpoenas are being served on some of them. But I think that's a long drawn out process, and mostly generic drug companies are likely to do well. I think, notwithstanding the legal overhang on, let's say, a Taro or a Dr. Reddy, I think both Sun Pharma and DRL over the longer run look to be good bets. Interestingly enough, Lupin has not even been named in this inquiry by the Department of Justice. And even as that inquiry, news of that inquiry was being announced, a large facility of Lupin got cleared for supplies to, or was at least partway cleared for supplies to the US. Lupin remains our top pick in this space insofar as generic drug supplies to the US are concerned.
Okay. A similar question by a lot of people. Everyone wants to know when should we enter the market? Is this the right time, or should we wait for some more fall? Which stocks can we invest in? So there are a lot of sectors that people are asking about, like banking, housing finance. So what would be your thoughts?
So I'll come to the stocks and sectors in a bit, but I think the philosophical answer to whether you should enter the markets or wait has always been consistently that India is in the throes of a multi-year heave. Last evening's surgical strike on black money tells me that the big, hairy reforms, the ugly reforms that I have been skeptical about the government's ability to tackle and implement, are also gradually being overcome. To my mind, India has long been a socialist oriented country, which is now gradually growing capitalist wings. The fear was that the US, which was a decidedly capitalist country, would it continue to grow socialist wings under the Democrats? And the answer is now very clear that both countries are firmly moving towards capitalism, but rule-based capitalism. It won't be reckless capitalism. It will not be the kind of capitalism that capitalists drive into the drain with. So to that extent, I think you should be long India. You should be bullish on India, notwithstanding today's mayhem in the markets. The sectors to pick are most certainly financials from a structural perspective, IT and pharma from a revival perspective. They've been, God knows, they've been battered for long, but you should certainly be staying away from sectors like cement and real estate. You should be staying away from discretionary consumption. But anything that is broad-based, anything that addresses large swathes of the population, anything that is staple in nature is set for a good innings. Like I said earlier, we've been publishing our list of top picks both through the retail and institutional desks. Over Diwali, we've been publishing somewhat picks. But top of mind, like I said, stocks like Kotak, Lupin, Infosys, HCL Tech come to mind. Stocks like Mahindra, which are rural focused, will come to mind. Discretionary consumption might hit Maruti for a bit, but not for long, I suspect. A stock like ITC with upcoming tax reform also might be better placed. Seculars like NTPC and Power Grid always look boring, and they will also be low on the volatility list today. So this might be a good time. Coal India is down to a near-term low. So these are all good large cap companies to invest in. HPCL we think is set for a good innings with its high refining margins coming in from the Bathinda refinery and the prospect of higher marketing margins coming in on the marketing volumes, which are much higher than refining volumes. So a lot of stocks come to mind, and if you go through our list of recommended stocks, I would call strongly and request all of you to consider many of these stocks, if not all of them, for potential as potential SIP candidates here on. There's no point trying to time the markets, but 9/11 in India's terminology today is a great opportunity to start your SIPs, whether they might be in mutual funds or stocks.
Okay. If I have to digress from today's topic,
Yes.
another heat of the topic is the Tata, the exit of Cyrus Mistry.
Yes.
So a question that's come up is, what's your call on the Tata Group per se and the stocks therein?
So that's a difficult one to call. Sneha, quite frankly, I think we haven't seen the last of this friction that is playing out at Bombay House. I think both sides have armed themselves with reasonably good logic and arguments. My only contention here is that it will be shareholders who will ultimately suffer in any long-drawn court battle or boardroom battle, and that doesn't augur too well for a group which is as respectable as the Tatas. I've gone through some of the arguments that both sides have presented. They mostly do seem to be genuine arguments, and in any situation where close collaborators, partners, or brothers have a brawl, I think the best thing to do under these circumstances is to sit down and resolve your differences. Unfortunately, I don't see that happening. So to that extent, I think it's going to be tough for the Tata Group's shareholders for a while. This is a very difficult call to make, and on whether what happens if a certain outcome plays out. Because in the first place, I think the outcome is going to be not so linear or easy to predict. It's going to be long drawn. And it's going to get messy. So I certainly feel that derating for the group is a given for some time to come. And so I think if we do see some good luck, it might be in an early resolution. I think the Tatas own some great brands, they own some great businesses, and there's no reason why they can't, the two warring factions can't put their heads together and resolve some of these issues.
Okay. We have next question from Prasad from Chennai. So his question is that this demonetization, is it going to reduce the liquidity in the system?
Yes,
Since,
it will.
We know that about most of the circulation that is of the 500 and 1,000 notes.
So look at it this way. The total size of the economy maybe is about 130 trillion rupees or thereabouts, 120, 130 trillion. Broad money supply, M3, as they call it, as the economists call it. I'm not an economist, but still. So is about 112 trillion, which is close to about 88-90% of GDP. And out of this, I think cash in circulation is about 15 odd trillion or 15-16 trillion. And out of that 15-16 trillion, about 11 to 12 trillion, as much as that, as much as 80-85% of that cash is in 500 and 1000 rupee notes. But remember that not all of this is black money. Maybe 1/3 of this is black money, maybe 2/3 of this is black money, maybe 90% of this is black money. We really don't know, because we don't know how much of black money assets are held as 500 or 1000 rupee notes, how much is held as gold, how much is held as land and real estate, how much of it is held as US dollars. Okay, so the jury is out on that one. My gut feel is that at 25% black money to the real estate, to the real economy, would put the black money economy at something like about 30 to 35 trillion Indian rupees. Now, I think at least a fourth of that would be held in cash, if not more. Maybe half of that is held in cash. So we really don't know. These are not published figures. So I think only that bit is going to go out of circulation. But yes, the inconvenience caused to transport operators, to small ticket people like MFI borrowers, to the lenders to these guys. So whether it's the MFIs, whether it's the transport finance companies who do a lot of their transactions in cash, is certainly going to, that inconvenience is going to persist, but not for too long. And remember that we have, so if your money is really accounted for, and if it is what we call in Hindi as pakka money, then there is no law on earth which is stopping you from walking up to the nearest bank branch and depositing it all the way up to 30th December, starting tomorrow, although banks are closed today. So I don't think it's going to be that much of a problem. Yes, the velocity of doing business will come down because of the early stage inconvenience. But look at the vast number of people who will be now forced into the formal economy, into financial inclusion, into opening new accounts at the SFBs, into opening new accounts at the private sector or public sector banks, wherever they are conveniently located. So if a lot of this money is actually floating around in the rural economy, and if that is official money, then we'll see lots more bank branches being opened up or CASA deposits rising for the banks. And I don't think, to my mind, I don't think that's a bad thing at all. I think a lot of digital payments and mobile wallets are going to see increased usage in the days to come. So if a few e-commerce companies are cribbing about cash on delivery transactions not happening, I think it's a temporary phenomenon, and it'll probably go away, if not in a week, then maybe in a month. I don't think, to my mind, that's a worry. The structural cure that is happening with demonetization, the increased prestige that India gets in the minds of international investors on a sticky issue on which it has slipped for so many years, I think that more than makes up for any inconvenience. So it's to sum up, I think it's short-term pain, but very, very high-quality long-term gain.
So I guess that would be the questions. Thank you very much, Mr.
Thank you so much for calling me for the webinar. And I hope all of the viewers of the webinar and participants have been able to get satisfactory responses to the questions that they've raised. And happy investing. I reiterate, this is the time to start, if not increase, to your SIPs.